If you've ever felt like investing was built to overwhelm you, you're not imagining things. The financial world profits from confusion. Charts, jargon, hot takes, and TikTok gurus yelling about urgent stock picks. But here's the quiet truth. The people actually building real wealth? They're not chasing chaos. They're simplifying. Welcome to today's video, your 4 ETF Blueprint for long-term wealth, even if you're starting late. This isn't some clickbait list. It's a proven, real-world system built to help you cut through the noise, simplify your investments, and finally build wealth that lasts. Whether you're starting from scratch or fine-tuning your portfolio, what you're about to learn can change everything. No finance degree, no 14 apps, no Wall Street lingo, just 4 ETFs, each with a purpose and one smart strategy. Let me tell you a quick story. A woman in her mid-40s had never invested before. No financial advisor, no insider access, just one financial book, a spreadsheet, and 4 ETFs she actually understood. A decade later, she's living off that portfolio, she travels, she volunteers, she sleeps well. Why? Because she didn't wait. She simplified and started. Stick around till the very end, because I'm not just giving you tickers. I'll show you how to make this strategy work for your age, goals, and life stage. If that sounds like the financial clarity you've been looking for, go ahead and hit that subscribe button. This is Trip to Wealth, and we keep it real, simple, and smart. Let's kick things off with the first ETF, the powerhouse of your portfolio. This is the growth engine, designed to fuel your wealth-building journey and set you on the path to long-term financial success. The Vanguard S&P 500 ETF, also known by its ticker symbol, VOO. Now, you've probably heard people say, just invest in the S&P 500. Sounds basic, right? But that simplicity is exactly what makes it brilliant. When you invest in VOO, you're buying ownership in 500 of the largest and most influential companies in the United States. Think Apple, Microsoft, Amazon, Nvidia, and Berkshire Hathaway. These aren't just brands. They're engines of innovation, cash flow, and global economic power. Here's what makes VOO different. It gives you instant diversification, exposure to multiple sectors like tech, healthcare, and consumer goods, and a track record that consistently outperforms most actively managed funds, all with an expense ratio so low it's almost laughable. What does that mean for you? It means your money isn't wasted on hidden fees or performance-chasing managers. It's working hard for you, quietly compounding in the background. Let's make this real. Imagine you're building a house. VOO is your foundation. It's not flashy tile or designer windows, it's the solid concrete slab that keeps everything stable during storms. And in investing, storms always come. But VOO has weathered market crashes, inflation spikes, and economic downturns, and still come out stronger. It doesn't chase trends. It owns America's biggest economic drivers and rides their long-term growth. If you've ever wondered where to begin, this is it. Start with strength, start with scale, start with VOO. Let's move on to the next building block. Let's talk about that second ETF, the one that adds fuel to your portfolio while you sleep. The Schwab US Dividend Equity ETF, also known as SCHD. Now, dividend investing isn't just about collecting quarterly checks. It's about building a growing income stream that compounds over time. And SCHD is a master at that. This ETF focuses on high-quality companies with strong fundamentals, consistent earnings, and a solid track record of increasing dividends. That means your income doesn't just keep up with inflation, it outpaces it. Think Coca-Cola, Verizon, Home Depot, companies that have been rewarding shareholders through thick and thin. The beauty of SCHD is in its discipline. It screens for companies with strong return on equity, healthy free cash flow, and at least a 10-year history of paying dividends. You're not just chasing yield here, you're investing in financial strength. And here's where it fits into the bigger picture. While VOO gives you market-wide growth, SCHD provides a steady, reliable cash flow. That's essential for reinvesting during your accumulation phase or living off during retirement. CHD also offers a unique edge in market downturns. Dividend-paying companies tend to be more resilient when volatility hits, providing a built-in buffer against major losses. Plus, the ability to reinvest dividends means you're buying more shares when prices dip, turning volatility into opportunity. And let's not overlook the mental side of things. Watching your income grow over time adds emotional stability to your investment journey. You're no longer just hoping for capital appreciation. You're seeing real money hit your account on a regular basis. Together, SCHD and VOO create balance. One accelerates your wealth, the other stabilizes and sustains it. All right, time to unlock the third powerhouse in your 4 ETF blueprint for long-term wealth, even if you're starting late. This one is all about future-proofing your portfolio, ensuring you're positioned for the next wave of innovation and market growth. Say hello to QQQM, the Invesco NASDAQ 100 ETF, your gateway to the top companies leading the charge in technology, healthcare, and more. If you're serious about building wealth in the long run, this ETF deserves a prime spot in your strategy. Let's break down why it's a must-have. Think of QQQM as your portfolio's innovation accelerator. It gives you exposure to the 100 largest non-financial companies listed on the NASDAQ. Companies that aren't just participating in the economy, but shaping what comes next. We are talking about Apple, Microsoft, Nvidia, Amazon, Meta, and Google. These are the firms inventing the tools, platforms, and ecosystems that define how we live and work. From artificial intelligence to digital payments, from electric vehicles to cloud computing, these companies are building the backbone of tomorrow's world. Now, here's the beauty of QQQM over its older sibling QQQ. It offers the same holdings, the same returns, but with a lower expense ratio. That means more of your money stays invested, compounding quietly in the background. Is it volatile? At times, yes. But that's the price of entry to be part of cutting-edge innovation. And because you've already anchored your portfolio with VOO and stabilized it with SCHD, you can afford to allocate a slice toward higher growth potential. Sarcastic truth. You're not going to beat the market by day trading meme stocks on your lunch break. But you can position yourself to benefit from the massive tailwinds driving global tech and digital transformation. QQQM also gives you exposure to long-term global shifts like renewable energy, fintech, and biotech, all without needing to pick individual winners. It's like owning the entire future economy in one click. This ETF isn't about hype. It's about holding a stake in companies solving billion-dollar problems. With QQQM, you're not just investing in stocks, you're investing in the future. We're at the final stretch, revealing the last ETF in our blueprint. This is the bedrock of your portfolio, the anchor that ensures you stay steady through market storms and economic uncertainty. But before we dive in, if you're finding value in this video and want more deep dives into wealth-building strategies, drop the word "more" in the comments. That way, I know you're loving this content and want to see more like it. All right, let's bring it home with the fourth and final ETF in the blueprint, one that gives your portfolio its defensive backbone, Vanguard Value ETF, ticker symbol VTV. VTV is your classic slow and steady wins the race type of ETF. It's not chasing hype. It's investing in companies that generate strong, reliable cash flow and trade at lower valuations. This fund is stacked with industry stalwarts. Think Johnson & Johnson, JP Morgan Chase, ExxonMobil, Procter & Gamble. These aren't moonshot plays. They're foundational, real-world businesses that keep delivering through every economic season. When markets are euphoric, VTV may not be the star of the show, but when the economy slows, when volatility spikes, or when inflation rears its head, these companies often shine. Here's why VTV matters. It adds ballast to your portfolio. While QQQM drives future growth, VTV protects your downside. When tech slumps, value stocks often outperform. It's this balance that allows the whole blueprint to weather storms without falling apart. And don't sleep on the dividends. VTV yields a solid income, and many of its holdings have been increasing those payouts for decades. VTV also provides significant exposure to sectors like healthcare, industrials, and consumer staples, industries that often stay strong when the rest of the market stumbles. In a high inflation or recessionary environment, these are the kinds of businesses that can maintain margins and pricing power. What you're building here isn't just protection, it's staying power. The kind of steady growth that compounds quietly in the background, building real wealth over the long term. You're not just buying stability, you're buying a time-tested stream of wealth accumulation. Now let's put it all together. Because a blueprint is only useful when it's built around your life, your goals, and your timeline. Now that we've unpacked all four powerhouse ETFs, VOO, SCHD, QQQM, and VTV, it's time to zoom out and ask the real question: how do these pieces work together to build lasting wealth? Because having great tools is one thing, knowing how to use them, that's where the magic happens. The beauty of this 4 ETF for long-term wealth is balance. You're not betting on one sector, one trend, or one miracle stock. You're creating an ecosystem. VOO gives you market-wide growth, broad exposure to America's biggest winners. SCHD provides passive income that grows even in retirement. QQQM positions you for the future with tech and innovation, and VTV gives you the stability to weather storms. This is what investors mean when they talk about an all-weather portfolio. One that doesn't panic in a bear market, doesn't chase in a bull run, and just keeps compounding. Quietly, powerfully, predictably. It's also customizable. Younger investors might lean heavier into QQQM for growth. Nearing retirement, you might allocate more toward SCHD and VTV for stability and income. The core remains the same, but the ratios adjust with your life. Here's something to remember. You don't need to check your portfolio every day. You don't need to jump in and out. You just need to stick to the strategy. Because building wealth isn't about speed. It's about direction. This blueprint also helps remove emotion from your investment decisions. When the market dips, you don't panic. You rebalance. When it surges, you don't chase. You stick to your targets. That emotional stability alone is worth its weight in gold. And with this blueprint, you're no longer wandering in financial circles. You've got a map, a plan, a way forward. Up next, we'll walk through the mindset that makes all of this work, and how to stay the course when emotions try to knock you off it. Let's wrap this up right. Let's take a breath and zoom out. You've just walked through 4 powerhouse ETFs, each one carefully selected, each one serving a distinct purpose in your financial life. Now it's time to connect the dots and see how it all works together. This isn't just a shopping list of tickers, it's the 4 ETF blueprint for long-term wealth, even if you're starting late. Whether you're starting with $500 or $500,000, this strategy scales with you. It's simple, it's powerful, and most importantly, it's doable. Let's do a quick recap. VOO gives you broad market exposure to America's economic backbone. It's your growth engine. SCHD adds a layer of dividend income, rewarding you with cash flow that grows over time. QQQM provides access to the innovators of the future, the Teslas, Nvidias, and Amazons reshaping our world. Finally, VTV brings all-weather protection, delivering stability through market downturns and economic uncertainty. Each one is a building block. Together, they form a resilient, diversified portfolio that can grow with you for decades. So how do you make this work for your situation? If you're in your 20s or 30s, you might lean heavier into VOO and QQQM to capture growth. If you're in your 40s or 50s, blend in more SCHD for income and VTV for stability. If you're retired or getting close, prioritize SCHD and VTV to preserve wealth and create consistent income. The point is, you're in control. This blueprint isn't rigid. It bends with your goals, your age, and your risk comfort. And guess what? It doesn't require daily tracking, complicated spreadsheets, or a Wall Street degree. Just check in once or twice a year. Rebalance if needed. Let compounding do its thing. Because the goal isn't just to make money, it's to build wealth quietly, confidently, and sustainably. Now that you've seen the full picture, take a moment to imagine the life this portfolio could help create for you. Less stress, more freedom, and real financial peace of mind. Remember, this video is for educational purposes only and does not constitute investment advice. It is important to conduct thorough research and consult with financial professionals before making any investment decisions. The value of investments can fluctuate, and past performance is not indicative of future results. Always assess your risk tolerance and investment goals before allocating your capital. And if you found value today, I highly recommend watching my next video. Don't forget to like, share, and subscribe to our channel. Also, feel free to leave your comment below. I read everyone. I appreciate your support. Until next time, stay consistent, stay patient, and stay winning. See you in the next one, Money Magician.